Hello, everyone. Thanks for joining our webinar with our friends from Toggle, with our good friend RJ, who's going to show us the new way of how retail investment research is done, is using AI for portfolio management. We're very excited to look at it, and thanks so much for showing this first of all to the picture users, and it's something that can revolutionize how we invest. Thanks so much for being here, and thanks so much for everyone for joining this webinar.
Awesome. Thank you, Juan, for the introduction, and sorry for those of you that sort of heard the earlier introduction. We at Toggle are really excited about helping people manage portfolios. Many of us come from a hedge fund background, and we were really frustrated by the tools available. Not just to look at the world of data and understand what was happening and how that might impact either holdings or things in a watch list, but more generally, really frustrated by just how manual a lot of these processes still are. Whether you're using Yahoo Finance or Bloomberg, oftentimes you're downloading data, you're sanitizing it, cleaning it, and sort of manually looking through things. And so the idea behind Toggle is to allow for the sort of ultimate contextual awareness, where machines and AI is used to help curate the world. And by the world, I mean, we're looking at several million time series across 9,000 assets globally. Everything from macroeconomic data, geopolitics, momentum, analyst expectations, and sort of everything in between, and really distill down into, hey, for your portfolio, here are the things you need to know, right? And make it highly relevant and very actionable, as opposed to a lot of the descriptive info that's sort of found everywhere else. So next week we're going to be launching Copilot, which will be free and free for everyone. You guys, as part of Peep Trading, will not only get Copilot when it's launched, but actually the fuller professional set, which is the same tools as many of these hedge funds are using. So without further ado, this is the basic of Copilot, where we set out to reimagine the portfolio dashboard, which really generally gives you a few things. Here are your holdings, here's the allocation, and maybe a little bit of descriptive info. And what you'll see here, after connecting a portfolio, which you can easily do, essentially every portfolio tool in the US, though unfortunately Tradier isn't yet supported. You come in, it'll pull in your holdings, and the first thing you see is a summary of what's happening in your portfolio. Where are there different themes or things that are happening that maybe you need to pay attention to? Oh, actually, momentum might be driving your holdings going forward. Technical analysis, you have two alerts here. And then on the left-hand side, what you see is a summary on a position-by-position basis, organized by how much of this is in your portfolio. So let's say you own energy stocks or Assaley, the energy ETF. First thing you see is, okay, I hold 8% of it in my portfolio. We have live ticking prices, which is what that little lightning bolt is telling you. And then it'll say, hey, what has the AI found related to S&P Energy lately? Actually, we've had several down patterns. One based off of equity consensus, being how are analysts revising the expectations for names in the energy sector, and one down pattern based off of technical analysis, right? And if, given that I hold 8% in my portfolio of S&P Energy, I might think to myself, wow, maybe I should start trimming this position or thinking about something like that. You'll notice the stars, and let me click in to an article for you to see more broadly exactly what this means. So you come in, tell you, hey, there's strong consensus that fundamentals are deteriorating. Typically, this has led to a fall in price. So first thing you get is hey, when has this happened? What does this look like from here? So over the, this is sort of 1 week, 2 weeks, the rest of the first month, 2 to 3 months out, and then 3 to 6 months out. It's going to tell you, hey, every time analysts have been revising like this, S&P energy has typically come down about 15% over the course of the next 3 to 6 months. And it gives you an understanding of what those confidence intervals look like for that forward path, and where you might go. It'll also give you a sense of what is this based off of. Well, this is based off of these prior periods highlighted in gray. And so you say, oh, interesting, this sort of first happened in 2015, and then more recently in 2020. And we actually do a full in-sample, out-of-sample walk-forward backtest where the system is telling you, hey, after you saw this the first time, when you saw it the second time, what would you have expected? And then what actually happened? Allowing you to sort of more easily gauge and understand, given the next time we see it, how has that typically behaved, and how does the distribution shift? And if this were the only thing you integrated into your investment thesis, how profitable would that have been over time? And obviously you can see it's a relatively smooth path upward. Closing that one, right? The second pattern we have for energy is technical analysis. Again, with a down pattern based off of a short-term moving average. Now, on the other side, you might have a position like Rockwell, where hey, it's a little bit more mixed. Instead of all the patterns being down, actually there were 2 up patterns, one based off of a macroeconomic backdrop of input price PMIs, the other one based off of strong momentum in the name. And then the downside pattern based off of valuation, where it's saying, hey, yes, it may have strong momentum and the economic backdrop might be poor, but for the name, actually valuations are getting a little stretched, and typically the stock has dropped after you've been at that stretched level. And all of this is to say, as you're actively managing your portfolio and thinking about risks and sort of how to tweak things, what names might you want to trade, what names might you not want to trade or look at, right? It allows you to very easily and quickly see not only what are the drivers that are currently active. In this case, PE is an active driver, momentum, the input price PMIs, but also give you a framework and an understanding of what does this mean, right? And that I think is really the key to a lot of the AI is taking this vast universe. Right? We're looking at more than 1 million time series across 9,000 assets globally, and distilling it down into, hey, for your portfolio, all of these names, actually here are the things you need to pay attention to, right? There's some downward pressures in S&P energy or XLE. The outlook for Rockwell is a little bit more mixed. Scrolling down, right? Yes, it's a small position in quick logic, but actually, it has poor seasonality and poor momentum. Or things like Monster Beverage, where it says actually, everything's pointing upward, right? You have a good entry point, momentum is strong, and technical analysis looks really good. Looks really good for the name. And you might say, well, it's only 1% of my portfolio now, but actually maybe I need to make it a larger allocation. Maybe this is a good time if I really like and think about that company to maybe shift some of my allocation as I go along. Obviously, as I said, no portfolio can be complete without the positions table. Very easily see, what are your positions, what percentage of your portfolio, and see all of that fun stuff. But that's less of the interesting information. And then the portfolio diagnostic check, right? This is summarizing across all of your holdings, giving you a sense of where are those drivers moving, right? Is it momentum? Is it technical analysis? Is it entry point, right? Where are things, where what are the types of things that may drive your portfolio as you continue to look forward and think about all of this. The other portion of Copilot is, within settings, you can set up a watch list. In this case, I have a mix of macro things and a couple of ETFs and single names. Copilot, you'll have that same watch list. And as I said, those Copilot accounts will remain free even after peep trading. As a part of peep trading, you'll actually get the full professional suite where, if you come into the feed, now this is a slightly different view where actually it opens up the entire world of everything that exists. So for your watch list, the feed is going to curate what it's finding in your names in the watch list. But actually, as part of the peep trading, you'll have access to everything. So you could say, I want to know what's happening in factor indexes, or I'm interested in knowing, has there been anything actionable in currencies recently? And when you click in, right, this will start to filter the feed based off of the different dimensions that you're looking at. So, hey, Scandinavian currencies, it looks like the Norwegian kroner may appreciate against Swedish, you again, that same framework holds where you come in and irrespective of what the type of driver is, you get the same analysis. So even though it's come down, that cross may come down even further, to the tune of a couple more percent, which doesn't seem like a lot, but in currency space is actually generally quite a bit. And use a lot of leverage and again, get all of that information and quickly see actually, this is based off of a number of other patterns that we've seen: 2004, 2011, 2014, and obviously you can see, that trend typically was downward. It typically was downward after we saw things like that. Now, I know generally a lot of people like to trade single stocks. So again, very easy to get there. So you can say, hey, you know what, I'm interested in single stocks. And I not only am I interested in single stocks, apologies, the internet in New York has not been super fun today. Not only am I interested in single stocks, but I'm primarily interested in technology stocks. So I can type in technology sector, get sector, and now you can start to parameterize based off of multiple dimensions, and then you'll see again the feed filtered in these different ways, and the idea being, even if the portfolio side is highly curated to the names that you actively hold, your feed is curated to, hey, here are the names on my watch list that I've been thinking about, or things that I like to watch that may help inform some of my other decisions in portfolio management. And then this aspect of feed where you can start typing in these different tags and looking at the different dimensions is, I want to look outside of my normal universe of things that I may look at or invest in. And I want this broader universe, and I want to see what the machine has found across all of these other things, and where there might be interesting opportunities for me to, explore further and dive into some of the data. The other piece on Toggle Professional is analytics. And the idea behind this is to take, sort of everyone's favorite, the basic charting tool, and then to start to actually inject data science into it, where, if you were to do something like, hey, I'm interested in charter communications. You may see, hey, here's the stock price, obviously rallied quite a bit from the lows. We can look, hey, over time, what has charter looked like? But going back to the 6-month chart, we could say, hey, actually, we've seen over this shorter period, we've seen this sort of much smaller than before, but this little V-shaped pattern, right? We could look at change, or maybe we say, you know what, I want to look at this visual pattern. Can you find me other times when we sort of had this visual pattern of a big drop and going up? Or, you know, possibly more related, we could say something like, hey, you know, we've seen this huge plunge and then this V-shaped recovery in the stock. When has that happened before? All you do is, you know, similar to how you might crop an image, you just drag your cursor, you hover over it, and then it says, hey, actually, typically when you've seen this sort of V shape from Charter Communications before, the stock has continued to rally, going up over the next month or so, and then starting to flatten out afterward. And if we click in, we can see, oh, actually, you know, there have been seven other times in its history when this has happened. Most recently, toward the end of 2019, beginning of 2019. Obviously, this is a stock with a bit shorter history, but you know, in just a few clicks, it'll allow you to start to explore visual patterns. Or, you know, if we start from another example, we could do things like, hey, you know what, I'm interested in gold miners. And, you know, obviously we've seen this sort of big run up and down. Anytime we've seen a drop in gold miners, like we've seen over this last period, you know, all you do is highlight. It allows you to see change. And then it says, hey, you know, gold miners dropped by 18% over 35 days. Actually, typically in the short term, you have a bit of a rebound before flattening. And actually, if you look at the confidence intervals, you certainly have an upward bias. And so, you know, the sum total of all three of these tools together is really to give you the ultimate situational awareness, right? What matters for my portfolio, and how do I think about that, and how do I think about what might drive my portfolio going forward? The feed allows you to sort of expand beyond just your portfolio to say, hey, you know, I want to see names in my watch list, and obviously that's highly curated and sort of shown to you on a day-to-day basis, and you can track, you know, as those things update, what that looks like, and then with the tag search, obviously opening up a broader universe beyond just the names in your watch list, to be able to, you know, for you to do a lot of idea generation. And then the analytics piece to allow you to start to say things like, oh, hey, you know, I've been noticing this happened, right? I wonder what that means for this other name, right? In this case, yes, we looked at gold miners and the drop in gold miners and what happens next, but actually we could say something like, you know, what happens to gold prices? Actually, gold prices have been sideways. So I wonder, you know, how have gold miners performed when they've had a down move like that, when actually gold has essentially just been sideways for a while, right? Do we have some pattern that looks at the combination of those two? And actually, we haven't had an overlap where you've seen a big down move in gold miners, but a sideways move in gold. Instead, if we say, hey, you know, when we've seen gold miners down, but actually gold up over a slightly longer period, maybe that gives us a different perspective on what gold miners might do, and actually certainly shows a much starker rebound than we saw previously, though it's really based on only two periods of 2000 and 2006. But, you know, the analytics piece sort of rounds out the other two, where it allows you to start to hypothesis test and think about what it is that you're doing. But, you know, everything that we're doing is trying to curate down, limit the information thrown at you to really be the most relevant of what is it that I need to care about today. Now, with that, you know, I'm happy to dive into anything in any more detail. Juan, I don't know if you'd like to kick off a question, or if there's anything that you'd like to see in more detail. But, you know, happy to explain or show.
So first of all, I would like to come up with what is the value that Toggle is bringing here is that the user doesn't need to go and search what's going on with their own portfolios, right? And you can plug your portfolios into Toggle, right?
Exactly.
So that's something that some people find problems on. I put my video as well so we can see each other maybe. So the idea here is you have your portfolio, you plug it into Toggle, okay? And then you get all these research, fundamental, technical indicators, analysis, combined with AI. And they're telling you a lot more than what sometimes our brain capacity can do. And that's such an amazing value proposition for anyone. You know, you just put your portfolio, it's free, you know, you don't need to pay anything else. You just plug it there and you'll get not only fundamental and technical analysis, but you're putting artificial intelligence on top of that. So if that's not something, I don't know, what is it? And right now, you know, information is such valuable for investors, and it's updated once every day. You said you're in mute. Sorry, RJ, where are you, man? Sorry.
Sorry, that was my own fault. I hit the wrong button. But I think, you know, I think you hit the nail on the head, which is, you know, we're looking at all of these different facets. Well, the machine is looking at all of these different facets, right? The macroeconomic picture, the fundamentals, how analysts are changing their expectations, momentum, technical analysis indicators, all of these things. But, you know, there's no limit to what people generally have access to. But I think the key thing is that not only does it look at all of these things, it tells you, here's what it matters and here's why, right? It does that level of analysis and curation where you're now no longer looking through all of this stuff and it's bringing to you, here's what you need to look at. Just as a, you know, a bit of an aside, on the institutional side, what's really fascinating, we've had conversations with many data providers who say that they estimate most of their clients use less than 1% of the data they have access to. Just because, you know, there's so much of it, and it's too hard to access, it's too hard to find, it's too hard to do an analysis on, and you know, with this, it's really the idea that you can expand this universe of things that you look at and use in your mosaic as you're thinking about an investment, and you can do that in a scalable way, and in a way that you know, it's not adding more noise to your process, but hopefully, you know, taking noise away.
Yeah, and the fact that, by the way, we don't have any commercial relationship here, right?
None.
I'm not getting paid for this, and not, well, the users are getting paid by having access to it, but that's a different thing. So how user-friendly it is, it's amazing, because look, you already have your portfolio, and I use the tools that you use for integration, which is amazing, and it takes how many seconds to integrate it?
Like 5 seconds to load in your portfolio.
And I know because we have that plugin, yeah. And it's just great, and I'm very excited to see where Toggle is heading. Do you have any competitors on this side? I'm just wondering.
So Not particularly. We like to think about things in a few dimensions. Actually, a lot of the traditional data providers like Bloomberg and FactSet and Refinitiv, right? They sort of act as these expensive data pipes. Companies that have actually done a really great job of the sort of value add analytics are things like Sentio and AlphaSense, but they've really focused in the document space. So using natural language processing and other techniques to help you understand sentiment of documents and summarize documents and look through this vast corpora of textual data. But we haven't really seen much on the structured time series side, right? We're essentially taking data that's already structured, making sense of it, and sort of presenting you with, hey, here's why you need to pay attention. And we haven't really seen too many people do that. I think a lot of the tools have still focused on allowing you to do that analysis in an easier way, whereas we're coming at it from, we know everyone likes to be lazy, for better or worse, and let's do a lot of the heavy lifting for you, and then you can take it from there.
And for retail, especially for retail, I was that was my question. I haven't seen anything.
So it looks like we have a few questions.
Yeah.
What are our favorite technical indicators? So I don't particularly have any favorites. That one of my colleagues who's a bit more in technicals generally uses two major ones and then occasionally a third. Stochastic KD spreads are often used for shorter term entry point signals, sort of an understanding of some of the short term dynamics. Something that's much more broadly used are moving average convergence divergence patterns, and thinking about and using some of those both on shorter and longer horizons. RSI is one that's used quite frequently. Something that I like, that I don't know if you'd call it a technical pattern, but things as silly as how many days has this moved in one direction. And so actually you see certain names that either have real short-term autocorrelation, where as they start to trend, they typically continue to trend over the next few days. But similarly, you have things that actually typically revert. Like, I can't remember if it's my recollection is the US 10-year Treasury future that has gotten to essentially 11 days trending in one direction, but never a 12th, right? And so certainly on short-term horizons, you can look at things like that and have a pretty good sense of hey, this thing's going to revert. And actually, a lot of thinking about the generalized toggle framework and how we look at things, it's actually quite a bit in that lens of where is there a coiled spring that might unwind, and then giving you, helping you understand what that driver is and what that's typically looked like, right? Whether that's on a shorter horizon or a longer term horizon, right? It's really identifying where there are major imbalances that have typically led to a consistent response in price.
I'm gonna make a question before you, because I think this is a topic that a lot of people are asking, and we've done that. Maybe you can help us one day to do a technical analysis, like, on theory, can you help us with that?
Well, I can certainly ask around for someone who might be able to, but I think, thinking about technical analysis more generally, it's a lot of people think of it as voodoo, but I think more than anything else, a lot of the work of behavioral economists over the last 20 years or so has shown that that people have biases, and as you said, Juan, right, whether it's confirmation bias or anchoring bias or anything else. And I think those bias, what technical analysis oftentimes tries to uncover, are some of those human biases, and giving you a framework to understand those inflection points of those biases as they're expressed in price, and obviously that dislocation between buyers and sellers.
Because we will have a full course by the BNB to all the participants of PipTrade. It will be free, and maybe we can give them a brief intro. Would be great. We've done some, but I know you're very capable. So we can go with the next questions.
So it sounds like we have a couple of questions about the projections and how those things look. So just to give you, we don't view these as being trading signals, right? These are meant to help investors in their investment process and integrate them into their mosaic. But we have run two sets of back tests. One from 2010 through 2012, the other from 2016 through 2019, only on the most liquid names. Think Dow 30 stocks, S&P, gold, oil, GBP, USD, things like that, and had a directional accuracy of 65 to 80%, depending on the period and what the asset was. And so, what's really interesting about that is actually this is data that most investors already have access to, right? It's not necessarily including alternative data. We're not looking at cell phone tracking data or anything else. Like, these are things that people already have access to, that have percolated through the market, and yet people aren't using the data they already have to the fullest extent that they could. Is sort of what that shows us. And even in this really turbulent period, right? Even when predictions weren't necessarily correct, like let's say we had a bearish pattern where we said, hey, this stock is going to go down. Even where we had bearish patterns, even if those stocks didn't go down in the midst of a 40% rally, they meaningfully underperformed the S&P 500. So, that it still sort of holds, and obviously relative versus absolute performance, we can all sort of argue over how you measure, but it's certainly been the case that as both in the back tests as well as our institutional clients using it, we have a number of examples of people messaging us about how things were sort of spot on. There's a question about how is it possible that Toggle builds a portfolio automatically? The answer is yes. It's something that we've been exploring. It's very early days. The tool we're thinking of calling very simply Builder. So that might be a little bit on the nose, but the idea would be both allowing an end user to think about thematically how they want to construct something, as well as helping with some of the optimization of do I want a risk parity portfolio, or do I want 20% in tech, but how do I think about that allocation? Do I want to do something based off of where there are bullish patterns in the system versus bearish, or maybe I want the S&P 500, but I want to overweight names that have good bullish patterns and underweight names that have bearish patterns, or things like that. So it's something we've been thinking a lot about and experimenting with, but it'll be a little while before we get there. Another question is on false positives, and false positives certainly. Again, I can't stress enough. This is and apologies to go back to a point that was made, I think, before the introductions. As we think about a lot of the advances in AI, and let's move from the finance space. In medicine, we've seen huge advances of, okay, we can have machines classify images, X-rays, MRIs, whatever they might be. We have humans classify, yes, this is a broken bone, yes, this is cancer, whatever else. And actually, what's been found in many studies is the combination of man and machine together actually has lower error rates than either one or the other. And I think similarly, right, you think about the Tesla self-driving car, right? The same sort of thing, right? We found that certainly, a self-driving car can't really self-drive on its own. Humans are generally pretty bad at driving, given the accident rates that we have in vehicular traffic. But that combination of human and machine together seems to actually lower a lot of the incidence of issues. And some of that technology that percolates down, whether it's adaptive cruise control or otherwise, right? That sort of combination, man-machine, we think that same sort of thing is the sort of optimal at this point in finance, where the system is trying to provide you as many statistics as possible and as many lenses as possible for you to understand how an asset might be driven from here. Certainly there are things that we try and minimize them, but there are things that are published, as I said, million time series, 9,000 assets. I'm not looking at every single one. We're not saying like, yes, this is a good one, no, this is a bad one, right? Certainly, data is data, and occasionally there can be very funny things in data that show up. But the idea is, you provide the investor enough information that they can quickly dismiss things that look wrong, right? Or dismiss things that they think are, this sort of smells fishy to me. And so, that gets to that man-machine combination, and the fact that, these aren't meant to just be, hey, here's a trading signal, but instead be, hey, here's a piece of information that you can integrate into your investment process.
Yeah, machines don't have what we call intuition.
Yes. Which MA is used for short-term analysis? That's a great question, and I can't remember off the top of my head. We actually look at multiple horizons for essentially everything. Within every article, the drivers will be highlighted and are very explicitly labeled, and there's a hover over top of it where you can see a further definition and exact parameters that were used. Where can you find tools to better understand Toggle? So within the Toggle platform, there's a help button on the top right hand side. So if once you have a login and go in, there's a help portal. There are also buttons throughout where you can submit questions, and so feel free to ask whatever questions come up, because the only way we get better is with feedback, and I'm certain we can explain things better, we can have better documentation, and please look through and let us know if you find something lacking. I know very little about blockchain, so I can't really answer that. Though if you do trade cryptocurrencies, they are in the platform, so you can look at technical analysis on and momentum on Ethereum and Bitcoin and any number of other things.
But it can be used for mining, that's for sure.
Definitely, yes.
But I think the patterns, if it's any market that is composed by supply and demand, kind of behaves similarly, right? So
yes, that's actually, it's something that, not to go too far on a tangent, but it's something that I'm really excited about, is thinking about how we can do more cross-sectional analysis where, okay, this stock just IPO'd, it's a small tech stock, and we've never seen this before because it has 6 months of history. But how can you start to look at similar assets and how they behaved, and maybe create a composite from those similar assets to better understand things where you don't have history? A good example of that was, a few years ago when GE cut their dividend. And you might say, okay, GE's cut their dividend once in the last 100 years. but obviously many other large industrial companies had cut their dividends. And so how do you think about understanding that response function, not as a function of GE, but as a, but as a function of the broader characteristic set, if you will?
Given the circumstances, because they can cut dividends because they have more projects, or they can cut dividends because they need to survive. Mm-hmm. Okay, so I think that was the last question. So I would like to encourage everyone here to go to Toggle, start trying it out, and RJ will tell us when the tool is up and ready, right?
Yeah, so I'll coordinate with Juan, and we'll send a message when the whole portfolio hookup is all ready for everyone to use.
Awesome. That's great. Thank you very much for having us a chance to look at this before
Awesome.
many people. And
Thanks, Juan.
and it's great having you. Thanks so much.